Okay. Okay. So what we're going to talk about tonight is an introduction into the world of trading, right? So what we started off with was really the basics of investing and knowing about the fundamentals, the technicals, and those things regarding investing, knowing about your risk and all that. But you notice how I started to also shift a little bit more into the economy and how the economy impacts investing and those things. Now, tonight, before we go ahead and move further and go deeper into the world of investing altogether, wanted to talk about another aspect of investing, which is trading, right? And I really shouldn't have said investing because I don't consider trading as investing. And as we go through, I'll go deeper into that. So for me, you're either an investor or a trader, right? Your mentality for the both of those is two different mentalities. Your approach is different. What you look at is different. And so that's what we're going to talk about as we go through this presentation. Now, who is a trader? Well, an investment trader is one who invests for the purpose of short-term gains. I should have highlighted that, short-term gains, right? So when you are going ahead and you are an investor and
Good night.
invest into economy, invest into a stock or a share, right? Remember, we can use those interchangeably, right? When you go ahead and invest in it, you're looking for your return in like 6 months, 9 months, a year, 5 years, 10 years, right? When you're going in as a trader, you are looking for a much shorter return on your investment, right? So you are going in and essentially, if you're in it for 6 months, that's long. Usually you're in it for the day, and that is why you hear the term day trader, right? Because you're in it for that day. At the end of the day, you're expected to either come out with your loss or come out with your profit, right? So that's really the who a trader is. He's going in for the short term and looking to maximize his profits in that moment. Now, what is the big difference between trading and investing? Well, I just mentioned some of them. The key differences are the duration in which the investments are held. Remember, when you are an investor and you go ahead and you purchase a stock of a company, you're not looking for that stock necessarily to take off overnight, right? And the reason for that is you want the opportunity to keep buying more, right? So you go ahead and you purchase a stock today and the stock takes off and you're like, that's fantastic. At some point, you want that stock to come down a little bit so you can buy some more for it to take off again, right? So you're really in it for that long game, right? When you're a trader, there is no waiting for it to dip to buy again. You are riding that initial shoot, right? Now, when you're a trader, and we can go ahead and touch on this. If we need to be, we can touch on it again. When you're a trader, you can go ahead and essentially bet, right? Now, I mentioned the term bet to someone one time and they said, oh, I don't believe in gambling and all. It's not gambling, but bet is the best way how I can put it, right? You can either bet that the stock is going to go up or the stock is going to go down, right? And you can essentially put in a bet based on that. Normally, when you're an investor, you don't go ahead and invest for a stock to go down 10 years down the line, or you don't invest in, oh, I think this stock is going to go down next year. No. And that is where you will hear the term short sellers. Short sellers mean that they have essentially put in a bet for that investment to go down. Okay, in the investment world, in the trading world, long means buy, short means sell. So a short seller is one that is anticipating that the stock is going to go down. It was made very popular back in the last financial crash because many of the hedge fund managers anticipated the bubble. And so what did they do? Rather than going ahead and investing for the buy like everybody else, they went in and did a short sell, anticipating that the bubble was going to bust within a certain period of time. And when it did, they made millions. Some of them made billions of dollars. So you can actually bet against a stock, okay? So that is a trader's mentality. A trader is essentially saying, is this going to go up? Is this going to go down? An investor is really looking for everything to go up over a period of time. And they tend to, if it start going down, completely get out of that investment and go into something else that they feel is going to go up. Okay? The key points in you that's used to make the investment. Now, when you're going ahead and you're investing, you're looking at the fundamentals, right? Investing is about 60% fundamentals, 40% technicals. When you are trading, it's about 60% technicals, 40% fundamentals. What do I mean by that? With the fundamentals, you know you're looking at what's the value of the what's the values of the company, what's the financial statement like, what are the key ratios of the company. Those are your fundamentals. Your technicals, are your technicals are essentially what is the moving average of the stock, what's the price action, what's the candlesticks. We'll talk about some of these later on, but those are the technicals, right? They're the ones reading the graphs. You always see it so popular where you see these guys sitting on 4, 5, 6 different screens and you have all these graphs all over the place. That's trading, right? Those are the technicals. When you're trying to read the graph to determine what the next movement is going to be, that's the technical analysis. The fundamentals is looking at the soundness of that company, okay? The attitude, right? We always go ahead and see the traders as just like what the picture shows, the money guys, the guys that are flashy, the guys that are going around with the high chest and being very in your face. It's really a personality that you kind of have to develop over time in order to be a successful trader, right? Remember, you are going into a trade and you have to go into that trade with the confidence of saying, this is going to go up this much within the next 2, 3, 4, 5 hours. So you have to, they tend to exude this over the top bravado, right? That is synonymous with being a trader. Investors tend to be a lot more low-key, right? Because even if they're in a high-risk investment, it's still not like trading. They still had time to sit down, do their homework. They could research it over weeks and those things. No, the trader is all about bam, bam, bam. They're looking at this and saying, I need to get in now, and let's go ahead, ride it and make some money. So that's the attitude of the trader, okay? Now, risk, right? We all have heard the horror stories about traders. Traders committing suicide, jumping off the top of roofs, going bankrupt. All of that has to do with risk. Trading does carry a higher risk. Remember when I was talking about risk reward? No, trading, of almost all of the investments you will make, trading carries the highest reward. Okay? You have, if you're in an investment, you go into an investment, in order for you to make $100 on that investment, you're looking at holding it for maybe 2, 3, 4 months, right? And that means that that was a good investment and you put in a whole lot of money. A trader can put in a fraction of that and make that $100 within 2 hours. So you can just imagine. Remember, with your risk comes your reward. So if you have the option, if you have the reward of $100 in 1 hour, then you're carrying a pretty big risk, okay? The other thing is when you're investing and the stock goes down, you don't need to come out. You can stay in that stock, you can ride it out until it comes back up. What that means, those losses, you have not realized those losses. They're not real, right? You don't feel it physically in your pocket, right? It's not real until you've sold that stock. The losses are not real losses. So you can sit in it and wait for it to come back up. Not in a trading world. You are going to realize that loss in real time. And let me tell you, you realize that loss, okay? However, with the gains, you realize the gains much quicker, right? So risk, reward, the gains or losses are realized much quicker. And that's pretty much it. That's the world of trading, right? As you can see, the theme here is really over the top because trading is pretty over the top. Now, what can you trade, right? What can you trade? Everything, right? You can trade everything, right? If you're in the US, you're trading, you can still trade everything. It's just that you might have to use several platforms to do it. If you're outside of the US, you can take advantage of what is called CFDs, right? And CFDs is essentially where you and a third party make that contractual agreement based on what is it that you're trading. In the States, they say that that is not in accordance with SEC laws. And so within the States, CFDs are not allowed, okay? So the most popular things that you see people in trade in the US is Forex and cryptocurrency, right? Outside of the US, you can trade anything. People actually were trading the Trump-Biden election, right? Who was going to win, right? So you can trade anything, okay? Now, I mentioned crypto and Forex. Those two, almost hands down, are two of the most popular things to trade. Reason for that is what is called volatility. Whenever you are trading, what you are trading is the movement within that asset that you are trading. So when you're trading a stock, if it's a stock that essentially is staying stagnant through each day, just doing little movements here and there, it's not going to be that rewarding. But when you go ahead and look at crypto that is doing massive swings up and down, you can just imagine there's more room for bigger profits when you trade that. So the more popular things to trade tends to be the more volatile. And the more volatile means more risk. Once again, see the risk reward. All right. So you want those big gains. You want to go ahead. You want to be slashing that money. You have to be willing to absorb that risk. Okay. Now, can you get rich overnight? Technically, yes, but mostly no, right? You can go ahead and say, I'm going to put up my entire life savings. Let's go into this trading. You pick one trade, make a killing on that trade. Yay, money raining. However, you could go into that one trade, go south on that trade, and lose your shirt, right? So that's why I say mostly no. What you want to do is you want to look at this. This might be a similarity between trading and investing. Investing, you are looking for what's your returns on your overall investment over time. With trading, you want to have that as well. So if you go ahead and you put up $100 to trade, don't necessarily look to make the $100 or $200 that same day, right? Now, if you make $100 in that month, that's fantastic. You've made 100% return within that month. That you did good, right? But along the way, you're going to have your peaks and your valleys, right? You're going to have your days where you lose. You're going to have your days where you win. You just want to make sure that you have more winning days than losing days. And if you have more winning days than losing days, boom, you're coming out a winner. All right. So if you're trading, what I do is anytime whenever I'm looking at my trades, I don't necessarily look at what's going on right now, right? I could be having a bad day and say, oh, everything is down. But when you look at how I'm doing for the months, I'm actually up on the months. So overall, I'm doing okay. And that kind of helps me to get through the rough days. So look at it on more of a net over a period of time rather than on a day-to-day basis. Although when the trades are going really good for you, yeah, look at it on a day-to-day basis on that one, because that feels great. All right. Now, risk management. That is probably the most important thing that you need to understand when trading, your risk management. Okay. The reason why those guys jumped off a roof, committed suicide, ended up on TV and Greed and all of these other crime shows, no risk management, right? As I said, look at a month, look at a week to determine whether or not you're doing good in your trades or not. Don't look at it on the day-to-day basis. Don't go in with $100 today and try to make $100 tonight. You are essentially what they call over trading. If you over trade, you risk that entire situation of you losing everything. And there's so many stories where people have lost everything off of trading. And that is why there's such a fear when it comes on to trading. It's because we hear all of the horror stories, right? If you use risk management, yes, you might lose some today. Yes, you might lose some tomorrow, but then you still have enough to go the next day, go the next day, go the next day. And then when things are now going good, just like how you may have a bad streak, you may have more than likely you'll have a good streak, right? And during the good streak, you make up for those bad days, okay? If you use proper risk management. The other thing, don't trade on feelings. Don't go ahead and you just lost on this trade and instantly you're working off of an impulse and saying, I need to make that money back right now. You're not going to think clearly. You're going to hop into the very next trade, giving it no thought. You're probably going to trade more than what you would feel comfortable trading, because your whole thing is, I need to not only make back the loss I just had, but I need a profit. Don't think like that. You go into the next trade with a regular mind, bet your regular bet. If it hits profit, fantastic. Even if you don't make up all of your loss, you've now reduced your loss and you say, okay, the next day, let's go ahead, hope for some good trades, and boom, then you can work your way into profit. But don't do impulse trading, okay? It's the same way if day's going good, you say, oh, today's going good. Everything I touch is just golden. Let me just go into all of these trades. No, because now you're going to feel cocky and you're going to make those exact same mistakes as when you're feeling down. You're going to go ahead, overtrade. You're going to put on much larger bets. You're going to go into trades that are extremely risky, right? Thinking that you're on top of the world. So don't do that neither. There's another thing called protecting your profits, right? Don't get greedy, right? Don't get greedy. You're in a trade and the trade is running in good profits. You feel comfortable with those profits. Come out. Take those profits, come out. Live to fight another day. Don't go ahead and say, oh, it's still going up. It's still going up. Let me just keep on riding, keep on riding, keep on riding. Because with all of these things, remember, they're extremely volatile. So at any moment in time, they could peak and come down extremely hard and fast. And if you're not by your computer, you're not by your phone in that period of time, all of your profits are now gone. And you could actually end up with a loss if you have not protected your profits. In later discussions, we'll talk more about what exactly it means to protect your profits, but protecting your profits is a very key thing into risk management. And finally, stay calm. There's always tomorrow. You have a bad day today, tomorrow could be a good day. So don't let your bad day essentially dictate and instantly you're like, oh, I shouldn't have gotten into this whole trading thing. Horrible, I'm not making any money and those type of things. And essentially you tell yourself, oh, I'm not going to go into any more trades. I know someone who went ahead and they had like 2 bad days and they said, you know what, I'm not going to do any trading for an entire week. And all of the trades the next week was all hitting profits, right? And they ended up missing out on all of those profits, right? Because they just didn't stay calm. Just stay calm. There's always tomorrow, right? Now, before I do the final goals, one of the things when it comes on to trading that you need to understand is with trading, you do not need to be the pros. You don't need to be one of those that's sitting down in front of the screen 12 hours a day staring at graphs and those things. Just like how you have financial managers to help you with investing, you have professional traders their job is to look at those screens all day. And they will go ahead and they will send out what's the trade. Just like how people send out what's the stock to watch, which stock you should invest in. Now, those are what are called signals. Now, note, you guys need to be careful when it come on to these people who come up and say, oh, give me $5,000, give me $1,000, give me $500, and I will go ahead and tell you how to trade. A lot of times, The only money they're making is the money that you just gave them. Okay? People who have proper signals tend to have what I call a free room, right? Most of them use Telegram, tend to have a free room where they'll go ahead and send out some of these trades, or some of them use Twitter and they'll send out the free trades. Try out some of those free trades, right? Now, think about it. If they're sending out their free trades, that's supposed to be almost their guaranteed money maker, right? Now, if you aren't making any money off of their guaranteed money makers, then it doesn't get any better when you actually go pay to go into their channel. Okay. So don't be so quick to go ahead and hop on everybody who says that they're a trader, right? That you need to do research on that. And the other thing, don't watch Instagram, right? Don't watch Instagram. You see it all over the place on Instagram. Guys going ahead and they're posing in front of jets and they're posing with desks full of money and say, oh, this is the trader's life. That's the trader's life today. Tomorrow, all of that money that was on that keyboard or that private jet can be gone. Nobody goes on Instagram and say, hey, check me out. I lost $1,000 today. Nobody does that, okay? So don't get caught in a trap thinking that, oh, trading is, but if I trade with this guy, he's doing oh so well. I should be making $1,000 on my money every day. No, nobody gets trading right 100% of the time. Nobody gets investing right 100% of the time. Remember, all you're doing is using a set of data points to try and determine the future. Nobody knows the future. We're not psychics, okay? The only thing we can do is make a best guess estimate as what will happen in the future. And that can change at a moment's notice, right? Especially this week, where, for instance, today, US went ahead and they released what they call jobless claims, right? Now, all of the estimates had it to where jobless claims were going to be about 384,000. They said based off of last month, they're using all of the proper data points. So anyone who's lining up a trade is going to trade based off of those data points. Well, it came in at 440,000. Big swing in the wrong direction. What that means, everyone who had done trades based off of good news is now losing money, right? You can't predict the future. You don't make any sense cussing the present. And it doesn't make any sense thinking that the past would have, but if you had just looked at this differently and those type of things. It's a risky venture. It definitely gets your blood pumping, but I actually would recommend it for anyone who is able to do it. Most of these trading platforms, you can go ahead and go in with as little as 100 US dollars. I want to put in that small amount, but you can go in with as little as that. A lot of, just about all of them, you can set up dummy accounts. So you can actually set up a dummy account and trade with fake money so that you can start seeing what that life is like. All right. It's not as bad as how you would think. All right. So this was just an introduction into trading, because one of the things I want to start moving into is start talking about price actions and eventually reach to the point where I at least show you guys some of the basic things with reading charts. So even if you are an investor, so you can look to see when is a good time to go into an investment. And if you do want to try and trade on your own instead of using the signals, you can use some of those tools as well. So thank you guys for your continued support. Be sure, I love the conversations that you guys have been doing, by the way. I've been getting a lot of messages. Hey, what do you think about this stuff? I can really see where all of you guys' minds are like firing on all cylinders. So definitely keep it up. I love all of the conversations. Be sure to check out my YouTube channel. Check me out on Instagram, WhatsApp me, or whatever. All right, guys. All right. Next week,